Yo, what's the dealio, man? Listen, you already know I got a straight banger for you today, all right? So in this video, what we're gonna talk about is we're gonna talk about order blocks, okay? This right here will revolutionize how you trade. You will guarantee make more money, all right? If you don't know about how to use order blocks, I'm about to break it all down for you and I'm gonna show you the exact tool that I use, the exact settings that I use, how I use it. Okay, so if you in the Discord, you already been using this and you've been getting to the money crazy all year. All right, if you guys are just watching this, tuning in, be sure to like this video, subscribe to the YouTube channel. All right, we are almost at 3,000 subscribers. I appreciate everybody who's tapping in, watching it, sharing the videos, and all of that other good stuff. All right, I sincerely appreciate y'all, and I'm coming up, showing up to you guys every single day. All right, so with all of that being said, y'all, right? Order blocks. Now, there's usually about three main ways that people find levels. All right, I will say four, but people don't really use the fourth one. So you got support and resistance, and then you got supply and demand, and then you got order blocks. All right. So support and resistance, usually if you're a beginner, that's what you hear about, right? That's all the introductory information. You're 9 times out of 10, you're not going to be using order blocks as a beginner because you don't know about it, right? All you know is support and resistance and how to chart. But as I've grown as a trader and gotten into my bag deeper, right, I stopped doing things that I was doing when I first got started because my understanding, right, and my knowledge base increased, right? What do I say? The more you study, the less you worry. So the more that I studied, not only was I worrying less, but also I was doing different things because I started to see a more efficient way of getting to the money on the charts. Okay, so I'm here to help you make money, make more money, and do it more efficiently. All right, none of this is financial advice. All I'm doing is sharing with you guys what I'm seeing on the charts and what is helping me change my life over and over and over again every single day in the stock market. All right, so the tool that I use for order blocks is going to be called Lux Algo. Okay, Lux Algo. I'm not an affiliate. This ain't a promotion. I'm just sharing with you a tool that I use, right? So, Lux Algo price action concepts. All you got to do is go to luxalgo.com and go buy it. It is a paid indicator, okay? I'm going to be clear, it's a paid indicator. But I want you guys to think about this, right? If you buy it or you don't, I don't really care, right? But I'm telling you that sometimes when you want to get ahead, you're going to have to buy the things that are the quality so you could get that edge, right? If you got that free indicator, I need you to understand that when things are free, it's going to be limited, right? But when you pay for the cream of the crop, you're going to get what you pay for, and these things are going to help you so much more, all right? So I say it with love, but stop being cheap, man. All right. It's like 60, 70 bucks a month, but in 30 seconds, you can make that $70 for the month in a trade by using this indicator, right? The first day I used it, I made my money back times 10, right? So it's like, please understand that you got to stop being cheap. Okay. Stop being cheap because this pay indicator is changing people's lives. All right. So we're going to go to the charts and I'm going to show you guys exactly this tool, what it offers and how I'm using it. All right. So like I say, it's called Lux Algo Price Action Concepts. Go to luxalgo.com. Right now, right here on the charts, it doesn't matter the stock. Okay. Does not matter the stock. Now, if we go to the indicators, it's going to be under, once you pay, it's going to be under invite only, right? And then you got Lux Algo price action concepts right here, right? So you go to the settings and then you go right here, right? So it'll show you the swing highs and the lows, strong and weak highs and lows as well. And then some things that I like, it'll show you liquidity grabs. So this is a very strong feature that I like. It'll show you fair value gaps as well. I love this feature. And then it'll show you premium discount zones as well, right? And it'll show you equilibrium zones as well. So I'm gonna go over all of these on the charts, right? First one is gonna be order blocks, right? So this is an order block, right? This is an order block, and this is an order block, right? This stock, this is First Solar, this is FSLR, right? So these are order blocks. So this was in pre-market. In pre-market, it created an order block. All it is if it can't get above this range, then it's going to reject and come down. Simple as that, right? So that's exactly what FSLR did. It created an order block here, right? Market opened up, tried to come up, couldn't, and then it came down, right? It had another order block above here, and then it had an order block up here, right? So if I wanted to trade this, I would have needed FSLR to get above this area right here, which is the second order block, to take calls, because it's so much resistance and so much stuff to get through to get here, right? So that's the power of order blocks. Let's go to another stock. Let's go to FedEx, right? We go to FedEx right here. They look like they on a double bottom right here, but look at the order block, right? So it's in an order block right here. It came down, and then it bounced up out of this order block, came back down, and now it looks like it's going to bounce again on this double bottom and come to the upside. Okay? So that's the order blocks, and that's why I love them, because it shows you exactly where they're at. Now you may say, what is this red bar and what is this green bar right here, right? Okay? This lets you know that in this area, there's more sellers than there are buyers. Red is sellers, green is buyers, right? There's more sellers here than there is buyers. So if we do lose this order block, the sellers are going to take over, and it's going to push the stock to the downside even more. All right? That is order blocks. And then as you can see, if we lose this order block right here, then we're going to come most likely down to this order block right here. All right? So that is order blocks. It does not matter the stock. Okay, we could go to AMAT, right? The concept remains the same, right? They're consolidating today, but there's no real order blocks here on the 30-minute. But if we go to the daily time frame, right, they're at all-time highs right now, so we're in a premium zone. These premium zones, basically, this is saying that this is an area where this stock is a little bit overextended, and it could reject here, right? That's what the premium zones mean. So you got sellers sitting up here and saying that this is a little bit overextended and it could drop, right? And it has a weak high, so it could go above as well. But nonetheless, it's giving you an area that's letting you know where it's a little bit overextended, okay? And then if you see a premium zone that's green, that lets you know that's a good area to buy, okay? If we go to Dell, do we see any premium zones? I don't see any premium zones. All I see is order blocks. So these are premium zones right here, all the way down to $70, saying that, okay, if it gets here, this is a good area to buy, right? Now, if we go to like the 30-minute time frame, we may see it, we may not, right? Let it load. So I don't see any premium zones. All I see is the red premium zone right here, but I don't see a green one, right? Now, if we were coming down, we might see some of those green premium zones, letting you know that that's a good area to buy, right? We got the order block right here on Starbucks, right? It came down and it bounced and it went up, right? So it came down on this 3 bar, created a 1 bar, and then it created a 3-1-2 bullish reversal to the upside, right? Off of the order block. So this order block is going to give you a lot of confidence in your trading, because you could see clearly what's going on. All right. Yeah, this is actually an order block and an area where the stock is, this is a premium zone, a buy-in zone right here, where the stock is at a discount, and it's a good place to buy, right? And as you can see, this order block and this area right here, this premium zone, when it did come down here, look what it did. It bounced off and it blasted off crazy, right? So when you understand and use this, you could really change your life in the stock market, okay? So that's order blocks, and that's also premium zones, right? The next thing we're going to go over is equilibrium zones, right? Equilibrium zones are, remember how I always say that the stock market is all about balancing itself out, right? The stock market is always about balancing itself out. So when a stock is up here, right, and you see an equilibrium zone, what this equilibrium zone means is that the stock is most likely going to come in this area to balance itself out, okay? What does equilibrium mean? It means a state of balance, right? If you're trying to find your equilibrium, you're trying to find your balance, right? If you got knocked off your equilibrium, then you're not on balance, right? So this equilibrium zone is an area where the stock is trying to balance itself out and come down to before it goes higher or before it goes lower, okay? So this is an area right here that you know that the stock could reject off of or bounce off of as well. And as you can see, Starbucks rejected off of this order block, came down, and then it came to this equilibrium zone. And what did it do? It bounced and it went right back to the upside, okay? So that's the equilibrium zones. It doesn't matter the stock, y'all. Okay, it does not matter the stock. You go to First Solar, okay, on the 30-minute, do we see an equilibrium zone right here? Okay, it came down right here slightly, and then it bounced up, right? But this is like a magnet, and so if the stock is too high or too low, it will come down to this equilibrium zone right here, right? So this is another area that of interest for me when I'm looking at stocks to trade, right? So we got order blocks, we got equilibrium zones, and we got premium discount zones, okay? The next thing that it does is it shows you liquidity grabs, okay? So I'm always talking about liquidity, right? Finding liquidity. Now, what is a liquidity grab? Basically is the area where people get faked out. You think it's going to be coming down, it doesn't, and then boom, it goes to the opposite way, right? So let's look at Intel today, right? We smacked Intel inside of the Discord. And so look at this right here. Okay, so Intel closed right here, right? Yesterday. It closed right here, right? It came down to fill the gap. But if you're a newbie, you might have thought that it was going to keep going down, right? And we had a premium zone here and an order block. So this is like a A++ setup, right? And yesterday we were on a 1 bar, a 1 candle, right? So the stock came down and then it created a liquidity grab, right? The liquidity grab is this right here, okay? This right here. When you see this right here, that lets me know that the stock had a liquidity event, and so the price came down here just so that they could get in at this price, and then it pushed right back up. And then as you can see, it went crazy, right? So this price action concepts, it shows you liquidity grabs. Anytime I see this, I know that there's a good chance that it's going to go in the opposite direction, right? Because when institutions are trying to get liquidity, all they're doing is they're letting the price come in the area and then it'll bounce and go in the opposite direction. And this went absolutely insane, right? Now you will see this on multiple different time frames, right? So let's go to another stock. Let's see if we can find one more, okay? I would have to search for another one because I don't see any right now, but that was a good example on Intel, okay? The next thing is going to be fair value gaps, right? Now these green boxes right here are all buying fair value gaps, right? And then let's say these on IWM, Do I see any red fair value gaps? Okay. So we got a red fair value gap right here, right? We haven't been able to get above this area because this is a fair value gap. This is an area of liquidity. So a lot of times what stocks are going to do is they're going to come up here and then try to get that liquidity and then go in the opposite direction unless buyers are so strong that it pushes through. And that's why for the past 2 days, we've been rejecting off of this fair value gap, right? So it shows you the fair value gaps, right? Very powerful. And you see we have another liquidity grab right here. And then look what happened. It came down, right? Very powerful stuff right here. Another liquidity grab right here. And then what happened? It ended up going to the upside. So these liquidity grabs off of this order block are very, very, very powerful, right? And then the fair value gaps as well. If we go to the daily on IWM, look what it's doing. It came down to this fair value gap, and it's either going to lose this fair value gap or it's going to drop and it's going to come down to this fair value gap right here, right? But fair value gaps are gaps as well. And so a lot of times those fair value gaps need to get filled. So tomorrow or this week, IWM could be coming down because we have these fair value gaps right here, but they probably won't stay there too long because they have a lot of buyers in this area. And when you come down to a buyer's fair value gap, you're most likely going to bounce and then come to the upside. Okay. And that's what liquidity is, right? Let's go to another good example. JP Morgan, right? So let's look at JPM. This is on the daily. Let's go to the weekly. Look at this right here, right? JPM, it came up. There was an area of liquidity right here, right? They got the liquidity. It had a liquidity grab. And then look what happened. They came right down. Okay. So this is how you use the liquidity grab and you understand what's going on in the actual market, right? So I'm always on multiple time frames seeing what's going on. And when I see certain things, it gives me an edge and it lets me know exactly what direction that a stock is going to be going into. Okay, so those are liquidity grabs. Now let's go to the daily on JPM. Now look at this. We got a fair value gap right here. So the stock came up to this fair value gap and then it rejected and created a failed 2 up right here and it came down. But where did it come down to? Came right down to this fair value gap right here and it's creating a failed 2 down on a daily. So now it's probably going to try to come back up, retest this right here, and then break through right there. But we do have a premium zone as well up here. So I wouldn't really be looking for JPM calls too much because there's too much going on up here, right? So now let's go look at, let's say Robinhood, right? Robinhood looks good to the upside. They came down in this fair value gap right here. There's buyer's fair value gap. And then they bounced up because that's what you do at fair value gaps, right? You come down, you get liquidity, and then you go higher. That's what you do, right? So that's Robinhood. So Robinhood looks good to the upside, and we don't have a order block until 150, right? So we could really start to pump up to 150, and then 150 is an area where we could start seeing a rejection, right? Let's look at APLD. If we look at APLD, we have an order block all the way up to $36, okay? And as you can see, they are in an uptrend. They came down to this equilibrium zone right here and also this order block right here, right? They bounced off of this order block and now they're in an uptrend to the upside. Now they could reject off of this fair value gap right here. If they break through this fair value gap, then they're gonna go higher and they're gonna go up here as well. And also, as you can see, the Lux Algo marks the previous month's highs, the previous week's highs, the previous day's lows and highs as well. So Applied got above the previous week's highs. And whenever you get above a previous week's highs, you usually end up going higher, right? So, like I say, y'all, it does not matter the stock, right? It does not matter the stock. What matters is understanding how to use these tools, right? For your betterment and how to make more money in the actual markets, right? AMD. Let's look at AMD right here, right? order block right here. So they came up, came down right here, bounced off the order block, and then they pushed up. They rejecting off the 21 EMA right here. So they could come right back down about 210, 211, 212, and then bounce and then go higher, right? But if you don't see these fair value gaps, then you're not going to be able to really see it, right? So the reason why I love it is because it shows the fair value gaps on every single time frame in real time, right? So if you see a fair value gap on a daily time frame to the downside, but it's green, and you know, okay, we could come lower, but if we could bounce and then we could go higher, right? And that's exactly what these stocks will do, right? If we go back to IWM and you go to the 2-hour time frame, right? You go to the 2-hour time frame. Look, we have fair value gap right here. Okay, we had a fair value gap right here. And look, every time it came in that fair value gap, it bounced up. Every time it came in, it bounced up. Every time it came in, it bounced up, right? And it created a liquidity grab here, and then it pushed up. Okay, so to show all the fair value gaps on every single time frame is extremely valuable to me, because that lets me know where stocks are going to bounce from and go up to, right? And reject from and go down to. All right. So we went over the order blocks. We went over the premium zones. We went over the equilibrium zones. We went over liquidity grabs. And then we went over the fair value gaps as well. All right. So if that don't turn you up, and if that don't make you want to go, get this tool, then I don't know what will, right? It's not a lot of money for the value that you're going to be getting and how much money you're going to end up making, okay? So like I say, stop being cheap, all right? Stop being cheap and get this tool, make this money so you could change your life, all right? And if you want to come trade with us and get all of this information early on, right, then come join the Discord as well, right? Come join the Prosperity Collective, because it's not about, right, if you could get some information 4 months ago that could have made you an extra 30,000, would that be worth it, right? That's what this is about, all right? So like I always say, y'all, make sure you get up out your head, go get into this world, because your head is a dangerous place to live, all right? And I want you guys to also remember, the more you study, the less you worry. All right. I hope that this video was valuable for you guys. If it was, let me know in the comments, and let's get this money and let's keep running up in the stock market. All right. All of y'all stay smooth, man. Peace.